Hello Pathfinder community. In light of yesterday's big down day in the markets, we thought it would be a good time to release another video to help put the recent volatility into perspective. For those nervous about the market, I would ask a simple question. Why are you investing? With the markets and investors in panic, it's a good time to ask that question. For most people, it's the potential reward from investing that influences them to take the risk. But when the risk is as prevalent as it is today, investors often forget about the reward and focus only on the risks. We've all heard the famous advice from so many successful investors. Stay the course, buy low, sell high, stay diversified, this too shall pass, etc. But the human condition doesn't easily allow that advice to stay in front of our emotions when we're being overwhelmed by the unknowns such as the coronavirus or a new oil price war. So back to the question, why are you investing? Is it to accumulate wealth? If so, there's no better way to do so than the stock market. Although this time may be different, the stock market has historically only had temporary declines. If this time is the time when the markets have a permanent collapse, well then so does the global economy and likely the end of the world. It's a possibility, but not a probability. Let's focus again on the goal. If accumulating wealth is the goal for something like retirement in the future, then we should be happy to accumulate the world's best companies at cheaper prices. Could they get cheaper? Certainly. Could they turn around tomorrow and be hitting all new highs in a short period of time? Absolutely. If accumulating wealth is your goal, be smart. Work hard, put your income into investments at cheaper prices, and be prepared to wait for them to pay off. Now is the time to stick to your long-term accumulation and investment plan and know that building wealth takes time, and these periods of volatility are a normal part of that. If you're an accumulator, be excited about taking risk and buying in when others are selling, and then be patient. But what about retirees? If you're investing for a secure lifetime of income for your portfolio, first and foremost, you should not be 100% in the stock market, period. If you are, you either got greedy or are chasing an unrealistic goal. For our distribution clients, we have a well thought out portfolio and withdrawal strategy designed to weather normal stock market corrections and downturns. There's an allocation to bonds, which are up right now due to investors flocking to safety. If it takes some time for the stocks to recover, we'll take income from the bonds. Stocks are long-term investing instruments, not meant for short-term gains. If they are doing well, great, we will use them to fund your needed cash flow. If they're not, which there will be many periods where the stocks are not doing well, we will take from the bonds. Periods of volatility are not a time to question your long-term investment strategy. We are watching this market closely and are available as always to answer your questions should you have any concerns. Thank you.